Auto component maker Gabriel India has posted a weak set of numbers in Q1 FY21, and that was due to the COVID-19 led disruptions. In our ideas for profit today, I'll discuss why despite the subdued earnings, this auto ancillary company offers significant opportunity for investors. Gabriel's net revenue fell by 76.2% on a year-on-year basis this time, as major original equipment manufacturers or OEMs across the segments had to halt production because of the lockdown. Now, its EBITDA or operating profit also turned negative due to the significant negative operating leverage this time. Though COVID-19 triggered a massive disruption, we've actually seen strong recovery in both the two-wheelers as well as the passenger vehicle segment. In fact, we've seen a V-shaped kind of a recovery in demand after the process of unlocking had started. Now, the demand recovery is also fueled by people's preference for, say, personal vehicles over the public transport because of the perceived risk of getting infected, which even persists currently. Now, Gabriel generates around 85% of its revenue from these kind of segments. It has a 25% and a 15% market share in two-wheelers as well as the passenger vehicle segment, that's respectively, and is best placed to take the advantage of demand uptick in these segments going forward. Now, the commercial vehicle segments, however, would take time to recover in line with the delayed economic recovery. Now, refreshed versions as well as the new models being launched by OEMs are expected to help Gabriel going forward from here as well. Now, in passenger vehicle segment, it has also started to supply to Maruti's Espresso model, and it is also in advanced stages to bag orders from 3 new launches of M&M, that's Mahindra & Mahindra, also new launches of Volkswagen and European company PSA as well. Now, in two-wheeler segment, it has started supplying front forks to HMSI for its Activa 6G model. It has also onboarded the new launch programs for TVS Motors as well as Bajaj Auto. And on the back of the superior product quality that it has and the strong client base, Gabriel has really established itself as a dominant player in the domestic industry. Now, it has 25% market share in the two-wheeler segment and a 65% share in the three-wheeler segment as well. Now, 15% market share is what we've seen of Gabriel in the passenger vehicle segment, and 75% of market share it holds in the commercial vehicle segment. Now, Gabriel India has been focusing aggressively on the aftermarket as well, where there is a huge opportunity, and it has about a 40% market share there. Now, it plans to leverage its brand strength and distribution network. In the quarter gone by, especially, it launched 11 new product lines which have received positive market response as well. Now, Gabriel definitely sees opportunity or significant opportunity in the export markets such as the US and the European Union. OEMs have actually started focusing on reducing the dependence on Chinese manufacturers in these markets for component supplies post the COVID-19 outbreak. And in fact, with critical deal wins with Volkswagen Russia, also DAF, which is a Dutch truck manufacturing company, it has actually placed itself as a strong player in the global markets as well. So looking at the valuations, the stock price is trading at 15.4 times the FY22 projected earnings, which is very reasonable. So going forward from here, investors could actually look for opportunities for the long term.